Real estate investment trusts are a popular topic at the moment, as some of them have been beaten up pretty bad lately. This presents some good opportunities to find top quality real estate investment trusts at discounted prices. REITs are a great way to invest in real estate and give you exposure to some hard assets without having to put huge amounts of money down. Essentially, you get all the benefits of owning real estate without having to worry about the day-to-day operations, having to fix up the houses or apartments, or even collecting rent. I believe that real estate investment trusts offer you a great way to indirectly own and invest in real estate. If you are new to real estate investment trusts, this video will be helpful for you because today we will be talking about 3 of the best REITs on the market today at below average prices. So without further ado, let's dive straight into it. The first REIT that I'm going to discuss today is Realty Income, ticker symbol O. This is probably the most popular real estate investment trust out there, and mainly because they are known as the monthly dividend paying company, and we'll get into that in a few minutes. If you look at the price chart, you can see that over the last year they are down roughly about 14%. So they were as high as 74.56 back in April 21st, 2022, and are trading all the way down here at 61.40 at close of business today, which is the 13th of April. So it's pretty big discount based on 1 year ago. So on the company's investor relations presentation, they give you a sense of who they are as a company. They are an S&P 500 company. They are one of only 64 companies with the elite Dividend Aristocrat title. They consider themselves a top 5 global real estate investment trust. They've offered a whopping 14.6 compounded annual shareholder return since 1994, and they've also offered a 4.4% compounded annual dividend growth rate since 1994, and that includes 119 dividend increases. What's really interesting here is if you look at the right hand side of the slide where they say where they are looking to go, they want to continue to average double-digit total shareholder returns, but for dividend investors and dividend growth investors, they want to continue treating the dividend as sacrosanct to their mission. So it's really important. And these guys are known as the monthly dividend paying company, as they say so themselves, because of this dividend policy. They are fairly well diversified with over 12,000 real estate properties all over the world, primarily based in the US. They have some properties also in Puerto Rico, and they are also now expanding into Europe. So sticking to the dividend at the moment, they have quite an incredible dividend history with 632 monthly dividends declared. And that includes 101 consecutive quarterly increases. So Realty Income has undoubtedly earned its reputation as a reliable income generating investment. At present, O shares offer an annual dividend of $3.06 per share. This results in an attractive dividend yield of 4.98%. Although the company does have a modest 5-year dividend growth rate of around 3.19%. The company currently trades at a price to adjusted funds from operation of around 15.5x. This is 9% greater than the sector median, but however, you are getting a top quality company with a great dividend history and really good management. The second company that I would like to share with you is called National Retail Properties, ticker symbol NNN. And these guys are quite similar to Realty Income, and lots of investors will sometimes choose one or the other. National Retail Properties is a retail-focused triple net lease real estate investment trust that primarily invests in commercial real estate leased to major national retail chains. It has a diverse portfolio of 3,411 properties across 48 states, totaling about 35 million square feet. This kind of diversification is strategically designed to balance the risks associated with all the different industries. So the company's tenants include a range of prominent national brands such as 7-Eleven, LA Fitness, Walgreens, Wendy's, Taco Bell and Circle K. This kind of diversified approach helps National Retail Properties to offset any potential risks from certain industries. In 2022, National Retail Properties delivered an impressive performance, earning around $3.21 per share in adjusted funds from operations, while paying out a total dividend of $2.16. This translates to a pretty conservative dividend payout ratio of only 67% when compared to the adjusted funds from operation. In comparison, its competitor Realty Income, which I discussed earlier, had a slightly higher payout ratio of around 76%. Despite Realty Income's reputation as the gold standard in the real estate investment trust sector, National Retail Properties has also demonstrated its ability to consistently increase dividends over the last 33 years. Given the REIT's low adjusted funds from operations payout ratio, this suggests that the company is well positioned to continue generating strong funds from operations and dividend growth for many years to come. Company also has a slightly higher dividend yield than Realty Income at 5.09%, although the annualized growth rate is in and around the same. It is roughly 3%. From a valuation perspective, the price to adjusted funds from operation is currently 13.2x, which is actually cheaper than Realty Income and offers a 7.19% discount compared to the sector median. And the last company I'm going to talk to you about today is Global Medical REIT. Global Medical REIT is an expanding healthcare focused investment trust that specializes in investing in medical office buildings. The company's portfolio of real estate assets has increased to around 1.5 billion as of December 31st, 2022. And it's no surprise that this predominantly comprises of medical office buildings. Medical office buildings, or MBOs, represent a unique asset class in the healthcare market that is commonly leased to health systems and physicians who provide outpatient services to patients. With 189 MBOs located in 35 different states, Global Medical REIT boasts a robust portfolio with a high occupancy rate of around 96% at the end of 2022. You can see some of their tenants there. Being a European, I don't know a lot of these companies or a lot of these tenants, but I do like to see good old Fresenius right in the middle there. Global Medical REIT primarily leases triple net leases, similar to Realty Income and National Retail Properties, whereby the tenant is responsible for all the property taxes, insurance and maintenance expenses, meaning that the company can put more of their money back into the business. The company's real estate portfolio mainly comprises of MBOs, which make up a total of 67.3%. Inpatient rehab facilities account for 17.5%, surgical hospitals account for 6%, and then other healthcare assets make up the remainder 8.7%. And this is spread out quite a bit throughout America, with Texas and Florida being their top two states. Over the past 5 years, Global Medical REIT has delivered a compounded annual growth rate of around 4.3% in its adjusted funds from operations, with earnings of 98 cents in 2022. Despite the challenges brought on by the pandemic, such as lower occupancy rates and lease deferrals, the trust managed to increase its underlying adjusted funds from operations figure and maintain consistent performance. During the same period, the company paid dividends totaling 84 cents per share, which results in a dividend payout ratio of 86%. While the dividend growth rate is quite low, at around 1 to 2% between 1 and 5 years, you can see that their dividend yield currently stands at 9.02%. And as we've shown, this is well covered by adjusted funds from operations. From a valuation perspective, we can see that the forward price to adjusted funds from operations stands at 9.8x, which is 30% lower than the sector median. So again, there might be some value in investing in a company like this, but given the current macroeconomics, there is obviously a lot more risk to this than investing in both realty income or national retail properties. That said, I think that they have a strong enough balance sheet and they are growing quite significantly. So there you have it. They are 3 real estate investment trusts that I am currently considering buying at the moment. I own realty income in my portfolio and I'm looking to add the other 2 to my portfolio shortly as well. If you like these kind of videos, please let me know in the comments below. Also let me know what real estate investment trusts you are buying and which ones I should consider. Have a good day.